Hello and welcome to hi, I'm Russell and this is my journal. I haven't done a video entry into the journal for a long time, and mostly because I really don't want to be YouTube famous or anything like that. But I feel like right now it's really important to make this video because I've really kind of rounded a corner as far as like my trading journey goes. No, I have not hit some big stride just yet, but we're in the middle of proving a trade setup that I have. So if you've been paying attention to the markets lately, it's been very, very exciting. We're in a bear market. Then there's a massive rally. Now, supposedly, we're ending the bear market. Tons of things going on and happening around the market and, what's going on. So I'm going to lay out a few things first. One, I don't think the bear market is over. And if it is over, then I think what you're going to get is back-to-back bear markets. I think that's going to happen. I think the Fed is going to tighten, and they're going to tighten too much. And basically, I'm in the camp that that's going to create a deflationary recession or possibly even a depression. Could be either way. I don't entirely know exactly what's going to happen. Okay, so as far as it goes, but I am pretty sure that the soft landing isn't going to happen and that things are going to it's actually going to be really bad because it really is setting up very negatively. So especially as far as financials go, and especially as far as like the lower half of earners in the country go, a lot of problems, to happen, Anyway, I've said, like a million times, so I'm not going to do that anymore. All right. So how then do we take advantage of the markets? Okay. Well, I personally trade options. This is how I try and take advantage of the market, puts and calls. I'm only into single leg options right now, which means I tend to buy one option at a time or one option at, I may buy two or three options, but it will be all the same strike kind of there. That'll be the position. I don't do all of the butterflies and iron condors and wheels and different strategies they have out there as far as like options trading goes. This is kind of how I'm doing it right now. And I will do more later when I have a bigger account. I'm sure I will sell all sorts of contracts. So with that being said, though, we're going to jump into this video. I'm going to transition there, and we're going to go here. I'm going to come back in here. Okay. All right. So right now, what you're looking at here is a chart of the SPY. Okay, and SPY is the SPY is essentially it's the ETF that trades the S&P 500. If you're aware of the S&P 500, this is how you buy into the S&P 500. Okay, there's a few others. There's futures contracts, the ES, and stuff like that. This, for most part, is what you will be buying if you're buying the S&P 500. Now, if you're looking at the chart, we're looking at a chart on the daily. Okay, if you read the thing below, by all means, I should say a few real quick things. One, if you're watching this, please give the video a like. Please subscribe. You can follow me on Facebook at the Russell Journal or Twitter at the Russell Journal. There, I'm on all of those platforms, and I'm there pretty regularly. If you're interested in more content like this, absolutely give me a like and a subscribe. And I may do more videos, but at this moment, it's just usually me doing this, so I don't really do a lot of videos because they're a lot of work and they take a lot of energy. Okay, so we are on the SPY. Okay, we are on the daily chart of the SPY, and you can see based on the daily chart that we are going in the upward direction. Okay, so the chart is more or less bullish. what we've been looking for in this is a turn. When is this bullishness going to end, and when is the new bearish going to start? Okay. Overall, nobody can actually tell you that, but I can tell you where the trouble will actually occur. And here, let me go into here. First of all, I'm going to pull this back. And we're going to pull a few things up. Okay. All right. Indicators. Okay. All right. So the very first thing you'll see on the chart is obviously you see these little bars going up in this line here. These are called candles. That's what those are. They measure the movement and change in price. The green ones, price starts at the bottom and ends at the top. This is where price started. That's where it's right. Usually indicates buying or the price going up. You can see from the red candles over here, the price starts at the top and then comes down to the bottom. All right. So that's trading 101. Okay. Now, what you'll see here is this is these lines that I have going through here. This is a Fibonacci, and you don't really need this. I need this on the chart for what I'm doing, but so it's going to stay right there for right now. I don't want to get rid of it, but you can more or less ignore these lines going across here. Okay. The next thing that you're going to want to notice, there are two indicators, two little graphs down here. The first is this bottom one is the slow stochastic. Okay. You'll need this. Okay. If you are, if you're going to trade these markets this way, you will need this. And I'll show you basically these two things are entirely how, what I'm going to show you is how markets work. Okay. The next thing that you can choose is this, which is the MACD. And I use this, it kind of measures kind of the pressure within the moves and lets me know what's setting up. More than anything, there are some trade setups that are, you know, like there are traps in the market, and this will show you where the traps are at, but that is a different video. So, but I'm not going to take it down. Just know the top one's the MACD. The bottom one is the slow stochastic. Okay. So that's what that is. Now, the one thing I'm going to turn on here for you guys at first, the very first chart we're going to look at, or the very first thing we're going to look at, is we're going to look at what are called the Bollinger Bands. Okay. Now, these things are actually really important. The Bollinger Bands are really important, and most people don't really understand them. I personally did not. I used to turn them off and turn them on. And what I would look for is if you look right here where you got really wide and then you got really narrow and then you got this explosive move up, I was typically looking for these narrow sections and where it would explode up. That's wrong. Don't worry about that. This is absolutely stupid though. Don't get me wrong. Narrowing can do stuff, but it doesn't matter. Okay. So we're going to go into this and we're going to talk essentially about how the whole thing works. So whatever I said before, just put it on the side. We can talk about that later. As of right now, this is the system. Okay. So you can see here that the market has gone from this bottom band all the way up here, and it's pushed all the way up here to this top band. Okay. All right. So the thing is, the way you trade this is you can get long here where this bottom band is at, where you hit this bottom band and try and ride it, and you want to ride it up to the top band. Okay. Now, the thing I want you to see here is if you look at this, there's some things that have to happen on the daily chart in order for you to know to get long here. The very first thing is, this is where we talk about our slow stochastic. Okay. Our slow stochastic measures momentum. Okay. And it measures momentum between the overbought, which is up here at the top in the 80, above the 80 level, and oversold, which is down here at the 20 level. Okay. The thing that you need down at this is you need, in order to buy, based on in order to buy this lower band, this has to be coming off of overbought or off of oversold. I'm sorry, out of the bottom there. Okay. Once that's coming out of the bottom, you hold it until you get to the upper Bollinger Band. Okay. This is where you're going to take price. You're going to take stock. You're going to take money off the table. Now, the thing that you can see here on the chart, which is really awesome, is look, right as it gets here, what's the first thing that happens? You get these red days right here, these two. Now, what is really incredible about this is when momentum, okay, when momentum is overbought and it stays overbought, or momentum gets oversold and it stays oversold, then you're free to play the rest of this move, okay? So here's the deal. This indicator right here has to stay overbought. If it stays overbought for 3 days, okay, then it's embedded and you are free to buy this stock, okay? Now, let me go. I got to look at this really fast. Okay, so let me zoom in that for you really quick. This will do this. So here I've zoomed in into the chart, right? Okay. We've got, right, you hit this upper band, you're above it. Okay. Now it's got to go below. 1, 2, 3. Look here. 1, 2, 3. We stayed overbought. On the third day, it's still overbought. And look what happened. Continued with the rally, right? So we knew that on the third day, if we stayed overbought, we were going to come in and buy, boom, goes up. All right. So this is kind of how this works. Now we're free. Now, there's ways that you go through buying this and getting in here because it's not that easy, but it is easy. Okay. We're going to zoom out. Okay, so here's where you're going to need a couple of moving averages, because what happens once it comes out of overbought? Does it just go straight down to the ground? And the answer is absolutely no. So what we're going to use is the daily moving averages, okay? If you're on Webull, it'll be the one marked MA, okay? I'm going to edit these. All right. So the dotted line there is the 18-day moving average, okay? When you lose the embedded reading on this, the stock will typically always make a run for the 18-day moving average, okay? So this is your chance to get short, okay? This is your opportunity right here to get short, okay? So now you can see over here, I have a put position on from 422 where we're at. Today, coming into Monday, we will lose this embedded reading, and I'm targeting the 18-day moving average as far as that goes, okay? Now, anything can happen. Things could get really good, or the bulls could just decide to run it up on me. But typically, most of the time, this is the move that's going to happen, okay? Now, there's a few other things on the chart. There's some gaps, and there's some other stuff. But this is how this works, okay? As long as this stays in overbought, it's longs only, okay? When it comes out, it moves to the 18-day average, okay? I can show you again and again on every chart where this is pretty much 95% of the time this is the case, okay? So that's what we're looking at, Okay, this is how the market works. The market more or less stays between these two bands no matter what. Okay, if you look here, it always stays under these bands, and the market makers work to keep it under the band. Okay, if it gets over that, the market maker will sell this down, and for good reason, right? They have to control this market. It can't just go straight up. Okay, so we're on the daily chart. Okay, this is how the market works. We stay between these two bands pretty much all the time. There's like 5% of the time that it comes out of the bands, and typically the market makers smack it back down. Okay, if it gets under one of these bands, the market makers drive it back up. Okay, it has to be a pretty crazy day in order for this to not play out. All right, so then we use our momentum indicator off of the daily to tell us what we should do that day. Okay. Now it can get pretty wild in there, and how to really work with those other trades, work with the trades intraday. That gets pretty messy. So I'm not going to explain all of that, but like the thing you can look at is like today, when we lose this, it'll officially be lost. It won't update until Monday, but it'll officially be lost on Monday. And then we're going down to that 18-day average, and that'll be mostly just profit taking in that move down. So they'll call it a bunch of other stuff. They'll throw out a bunch of news catalysts that they say it is, but it really won't be. It's just, it's time for the move to be over. These guys spent a lot of money making this go all the way up here. I'm sure they want to take some money off the table, and that's a pretty good way to do it. So that's really how that pretty much, this is really how the market works. Okay. If you really want to see more videos about this, let me know in that comment section. I will happy to explain this further and show more of how it actually works. But if you're really interested, there's a guy named Ira Epstein on YouTube. He's really good at teaching this stuff, and he does have a class that you can take. I plan on taking the class, but it costs some money, and I'm bootstrapping it right now, so I've got to figure out how to do it without taking that class. But like I said, again, get to the bottom Bollinger Band. That's where shorts come out here. The shorts will come out of the market at the lower Bollinger Band. They will stay in as long as it stays embedded on the bottom side. The top side, they will stay long. They'll come out at the top Bollinger Band, and they will stay long as it stays overbought. So that's pretty much how that works. Anyway, with all of that, I'm Russel Liss. You can pretend I said some sort of cliche, and we're going to end it.